Welcome back to the channel. I'm Javi, and today I want to dive into Serve Robotics and why I think it has good long-term potential, but with their new innovations and investments, I think it can grow for long-term gains. So stick around and let's dive right in. I do want to disclose my Serve Robotics position. I do hold 103 shares at an average price of $9.76 with a portfolio diversity of 0.26%. Okay, scrolling to the bottom, Serve Robotics Inc. engages in providing self-driving delivery. It designs, develops, and operates zero-emissions robots that serve people in public spaces, starting with food delivery. And just a quick fact, it did spin off from Uber Eats. It does have a current market cap of 286 million with a negative PE ratio of 8.1. The current CEO is Ali Kashani. He has 67 employees and it is headquartered in Redwood City, California. And it was founded in 2017. And so just going to their website, you can see the video of their little robot just going around the street. And one question to definitely ask ourselves is why should we deliver 2-pound burritos in 2-ton cars? I think that was their motivation to get started with this delivery method. So, what a customer would have to do is they order it from the restaurant and they get a pin on their phone. So, when the robot gets to them, they just type in that pin and they just get their food like that. And the robot goes back to the restaurant or wherever the next order will be. So, it is a very basic business model. It's easily understandable. And I think you can easily scale it as well, especially in big cities that have a lot of people in it. So it can also lead to less traffic because these little robots now are going to be on the sidewalk. One potential problem I do see with it is that it is small, so I feel like you can easily ram it over, especially if you're driving a big car like a truck or something. Unless they implement a method to where it can hit the light to cross the road, but even then it will be hard to see it. So he has a little picture here and it has a message on the console here that says on delivery, so other people that see it know that it's going to a destination, so not to mess with it. Some of their partners include Uber Eats, 7-Eleven, Nvidia, Delivery Hero. I actually haven't heard of them before. And so this is the little robot on the street. It does look small. So in this video, the girl is inputting her PIN from her phone to actually get the food out. So it's a very basic business model, I think. I kept scrolling to the bottom. So some highlights. Serve unveils a commercial deal with Uber to deploy up to 2,000 robots. So that's a big deal, actually. So we'll see what the earnings look like. Okay, next, I do want to cover Serve Robotics' last earnings report, which was reported on August 24. And as always, this is not financial advice. I just like talking about stocks and just thinking about the future in general. So please do your own research and invest at your own risk. So to answer our question from before, why do we need to move a 2-pound burrito in a 2-ton car? We've had rapid progress in robotics and artificial intelligence, AI, and it can help reduce our reliance on cars. Some statistics to point out, the US drivers killed 20 pedestrians each day in 2021. Private cars and vans caused an approximate 10% of global energy-related CO2 emissions in 2022. Finally, tailwinds accelerating robot adoption include advances in AI, faster and cheaper compute, cheaper sensors, and ubiquitous data connectivity, as well as labor shortages, wage inflation, and new worker classification laws. They point out their total addressable market for robotic and drone delivery is expected to be 450 billion by 2030, which is crazy, and it's half a trillion essentially. And one of the issues that some companies are having, for example, DoorDash, is that they're increasing their revenue by 200%. But the thing is, their costs of revenue increases as well. So, for example, theirs was 235% from 2020 to 2023. Also, AI-powered robots are on a mission to make last-mile deliveries profitable. The median distance of food deliveries in the United States is approximately 2.5 miles. And all this data came from ARK Invest as well, as you can tell their sources there at the bottom. Okay, so we're finally looking at some of their leadership. We have the CEO, who is Ali Kasani. He does have a PhD in robotics, and he has 15 patents under his name. He also co-founded and he was the CTO at Nurino, and he was acquired by Generac. We have the president and COO is Turah Parana. Brian Reed is the CFO. MJ Bork Chun, she's the product manager. Dmitry Demeschuk, he does the software at the company. We got Abraham Yuan, he does the hardware, and Rajesh does autonomy at the company. And there's some other info or little facts about their careers here as well. They do have investments by Uber, Nvidia, Delivery Hero, and 7-Eleven. Uber is their largest shareholder and commercial partner. Nvidia is their technical partner since 2018. And Delivery Hero is the German food delivery platform in Europe and Asia. 7-Eleven is the first convenience store partner with 13,000 stores in the US and Canada. Some of the recent highlights, they have 15 million in additional capital. On July 24, they had a private placement transaction with a single institutional investor. Some of their operational expansion for quarter 2 24, they saw a 28% increase in average supply hours and a 23% increase in daily active robots. They also expanded Los Angeles operations for delivery operations into Koreatown in Los Angeles. And for revenue growth, they had a quarter 2 24 revenue of 0.46 million, including 80% sequential growth in delivery and branding revenue, 0.4 million in software service revenue as well. To cover their track record of growth in Los Angeles with 300 and plus restaurants, they've had a 25% month over month growth with a 24-month of rapid increase in deliveries since early 22, up 99.94% reliability, delivery completion of 10 times better than drivers with roughly 0.5 failed deliveries per 1,000. Over 50,000 deliveries in LA, and 100 robots for deliveries and research and development. They have the Serve's Los Angeles fleet, and I just realized they actually have names for them. So they have Marion, Leon, Austin, Lance, Ariel, Forrest, like Run Forrest Run. Serve Robotics has signed one of the largest contracts in the autonomous vehicle industry with Uber Eats. They have a full 2,000 robot deployment expected by the end of 2025. Their fleet is already integrated into Uber, which will help them grow into new markets more efficiently and achieve high levels of robot utilization. In Los Angeles, they expect at least 250 robots by the end of quarter 125, and they are considering expansion into new markets, more specifically into the metro areas by the end of quarter 2 25, and that includes San Diego, Dallas, and Vancouver for right now. Serve has 4 phases to roll out their 2,000 robots. The first phase is design. The design phase is pretty much complete for the third generation robot. The second phase is manufacturing. They secured that contract with Magna to manufacture the robots. The first robot is expected to roll off production line by the end of quarter 4 24. Deployment phase, their goal is to deploy 2,000 robots by the end of year 25, and they expect at least 250 additional robots in LA by the end of quarter 1 25. They do want to expand into a new major metro area that includes San Diego, Dallas, and Vancouver, as mentioned earlier. For scaled operation, that's the fourth phase. The goal is to improve operational performance and efficiency in the new geographics over time. At full utilization, each robot is expected to pay for itself in under 1 year. And additionally, they want to generate consistent improvements to robot placement, autonomy, software, and operations. And on this slide, they pretty much are bragging about their unique air-powered robot, unique fleet operations, unique go-to-market strategy, and they have some of the specs for the robot. It can hold up to 13 gallons of cargo, which can hold up to 4 pizzas. It does have an all-day battery charge, all-terrain, 7 miles per hour top speed, redundant connectivity, and it does have that touchscreen interface where clients can type in the PIN or code to open it, and it has that level 4 autonomy. Serve includes a slide with the different types of autonomous robots, starting with the urban robots, the autonomous vehicles, and the drones. The urban robots pretty much cover a short distance. The safety profile is low. Regulators pretty much allow it to exist within pedestrians. Commercialization, it's pretty much launched. For autonomous vehicles, it's the medium distance with a high safety risk. It is restricted by regulators, and it is still in the research and development phase. As well as the drones, they have a high safety risk. It is restricted still by regulators, and it is still in the research and development phase. Another revenue approach that Serve is taking is ads on the robot itself. So they are monetizing the unique robot capabilities such as the ads and data, as well as licensing and underlying technology makes robots more profitable than couriers. Serve Robotics can also serve as a software platform. For example, Magna International has licensed their technology to accelerate development of its new robotic products. As a leading urban robotics delivery company, they believe that they are well positioned to become a platform of choice for companies building new non competing robots and services for complex public spaces. They believe that it will provide them with an additional monetization opportunity. Serve Robotics actually defines what level 4 autonomy means for a car, and I actually looked up the Society of Automotive Engineers as well for their classifications from 0 to 5. For level 0, it means no automation. The car is basically a fancy metal box with wheels. Level 1, it requires driver's assistance, think cruise control or basic lane keeping. Level 2, partial automation. This is FSD territory. This car can handle some tasks, but the human is still the ultimate control or the boss of that car. Level 3, this is conditional automation. The car can manage itself in certain situations, but the driver needs to be ready to take over when things get tricky. Level 4 automation. The car can handle most scenarios without human intervention. No more hey driver wake up moments, basically, such as like the ones in Tesla. Level 5, full automation. The car is like a grown up. It's a responsible adult now. It can drive anywhere, anytime without needing a human babysitter. And Serve is still at level 4 right now with that high automation on the sidewalks. Serve has a playbook for capital and efficient growth. Their financial partner will provide upfront capital for its robots. And number two, their contract manufacturer, Magna. Magna International is Serve's exclusive contract manufacturer. Robots could reduce global emissions by approximately 2% annually. That's approximately 762 million tons annually, which also provides more convenience to consumers. And relative energy consumption per kilometer squared, the gas vehicle consumes about 100% energy, and electric vehicles about 20%, and Serve would consume about 2.5% of the energy. For their financial updates, they have a total of 60 million in financing completed in 24. In January, they issued 5 million in convertible notes. In April, they completed 40 million in public offering and uplisted to Nasdaq Capital Markets. In July, they closed 15 million in private placement transactions. Moving on to their financial results for quarter 2 24, they have a revenue of 0.47 million, including 0.3 million of software service. As expected, Magna's service contracts substantially completed during the second quarter. Delivery and branding highlights, they have a revenue of 0.17 million, which is an increase of 80% quarter over quarter and 178 over the same prior year. Gross margin improvement of 64% quarter over quarter and 85% compared to the same period prior year. Cash and cash equivalents, 28.8 million as of June 30, 24. Free cash flow calculated as cash flow used in operations minus capital expenditures was negative 6.5 million, and including 1.1 million related to initial manufacturing costs, proceeds from July 24 private placement to be used to extend the operational runway and other strategic investments. For the share details, as of June 30, they have 36.5 million shares outstanding as of June. Their share details, 36.5 million shares outstanding as of June 30, approximately 42.6 million shares on a fully diluted basis. For July 31st, they have 37.1 million shares outstanding, and on a fully diluted basis, they have 48.2 million shares. And that is why the share price is actually dropping, because they're continuing to get diluted. That pretty much concludes the end of this presentation. Please remember that Serve Robotics is such an early stage company, and at any time something can go wrong and they can go bankrupt. As you can tell here, they've had just a small revenue and they're constantly getting diluted. So make sure you do further research and invest money that you are willing to lose. This is not financial advice. I'm not a financial advisor. Please do your own research. But I do appreciate you for watching this video. I hope it was helpful. Make sure you like, comment, and subscribe, and I will see you on the next one.